Good morning, ladies and gentlemen, and welcome to the show. Glad to have you guys here. Now, let's get the charts started right quick, and let's open up the charts right here and take a look at what's going on. You know what? The world is drifting toward war. Two different spots in the world. Let's you read these headlines here. My mouse is stopping and going and stopping and going. It's got a faulty. When you hear that bloop bloop sound, my mouse has got a faulty optical sensor in it right now, so I got to get a new mouse. Uh, okay, Ukraine. That's one spot where we got a hot spot right now, a really serious hot spot. Is in Ukraine. If we switch over here or take a look, Ukraine urges NATO to set up a membership path. That is okay. Let's take a look. Here's another hot spot right here. China sends more jets to Taiwan. Uh, Taiwan says it will. Well, look, there's two different hot spots in the world right now. We're drifting toward. It's really heating up. Okay, and now I got to show you something else. This chart I wanted to show you. This chart is people that are jobless. In the United States, and what we see here is we see it's went down. It has went down, but it's leveled off, completely leveled off now. It was up around 30 million people there going back last year at its peak. And yeah, it has leveled off, but it seems like the only one that's continuing to fall is the regular state claims here. And the pandemic unemployment insurance is falling slightly too, but overall we've got about 18 million now, and it's staying at those numbers. These are jobless people who are finding it hard, and they've been put out of work. As you can see, they've been put out of work because of the pandemic. Okay, so there's an old saying in Great Britain. It says, the saying goes like this: in for a penny, in for a pound. Right? Now they've chosen the path of going into this never-ending money that they're printing, and it's a path that they're being forced to choose. They don't have any choice. They're going to have to keep printing money endlessly. Why not print a little bit more and support the 18 million people who are out of work? Put in some new social programs. It's time for that, like UBI and stuff like that, as a social safety net. If they're going to print endless money anyway, it's almost like if a guy was going to build a house, and it was costing him millions, and him fussing over something that only cost a couple $1,000 more. If you're going to splurge, you might as well splurge big. Go big or go home, sort of thing. You know what I mean? What's the point in fighting over a small little amount when you're doing excess, endless amounts of money that they're printing? It would only speed up the hyperinflation by a few days anyway. It's going to come anyway. They're on this path, and there's no turning back now at this point, because if they even hint about turning back, everything's going to collapse. So, I find it ludicrous, absolutely ludicrous. The people out there that believe the Fed is going to go into a tightening program or a tightening schedule, and interest rates are going to rise, and the dollar is going to become worth more. I almost think that's ludicrous way of thinking, We're on this path, we're going down it, the dollar's going to be worth less and less, and it's going to speed up as time progresses. And there's no escaping it now at this point, And so I think the very strong possibility is that they will institute these programs and these new social programs. Let's take a look now at silver. Silver's been up all morning. It's dropping off now just a little bit, but it's still up 32 cents on the day so far. Let's take a look at gold. Hear my mouse giving me headaches. Gold is $17.54. It's up $16.90 today. Let's take a look at cryptos, see what they're doing. Cryptos is at 1951 billion, and cryptos are doing good, really rock solid. We're right in the middle of the altcoin madness, let's call it altcoin madness. That's when they start to really buy up the price of the altcoins, and Bitcoin itself doesn't seem to really go anywhere. That's when you're in the meat of the rally right now. We're in the meat of the rally. That's when you're in the center of it. Like if you got a sandwich, you have to go through a layer of bread and then another layer of bread, but in the center is the meat. That's where we are right now in this cryptocurrency enthusiasm. How long will that last? When they're buying into the altcoins? Well, when it reverses, you'll see the altcoins start to go down. You'll see Bitcoin go up. That's when you need to beware. That's when we're nearing the end of the rally. And Bitcoin always does that. It always hits the end of a rally at a certain point, and it falls. We're not there yet. We're there when like I say, when you see the altcoins stop rising in price, start to drop, and Bitcoin starts to be supported. That means that they're selling off their altcoins and they're buying into Bitcoin for safety. And that will come at a certain point. How much higher will Bitcoin go before we get to that point? Well, my idea on it is that we'll see a massive rise in these altcoins that we're seeing right now. And at a certain point, you'll see it switch over to a massive rise in Bitcoin and the altcoins. Right? And then you'll see it switch to them start to sell the altcoins off and buy into Bitcoin. That's when to beware when that happens. Okay, Dow Jones Industrial Average today, 27 points to the downside, 33,418 today. Let's take a look now at crude oil, 59.37. It's going along sideways a little bit. Price overall has come down a little bit because it was up to 62.11 not long ago, and this chart is a descending chart, oil price. So today it's down 40 cents or 0.67%. Where are we on this? We're on the MOVE index now. MOVE index is going along sideways at 62.54. Today it's up 2, which is 3.73%. The MOVE index is up today. Now we're going to take a look at bonds. Seeing the Treasury yields falling on the long end. The U.S. 10-year is at 1.6. What's that? 1.64 on the U.S. 10-year, and the U.S. 30-year is at 2.35. And we see falling yields today on the long end. Now let's take a look at the U.S. dollar index today. See what it's doing. The dollar is at 92.14 and falling. We're going to see a lot of these trends continuing. I think we're going to see the dollar falling off and losing strength. I think right now it's on a roll. And I think it very probably will break down below 90 into the 89s pretty soon. What's happening is people out there are starting to realize, more and more people are starting to realize that their dollar is losing value. They're seeing prices go up. Now, I wanted to measure it myself. How much is it? What is the inflation rate? And I picked something that, yesterday I picked something in my mind that I was going to use to measure inflation. I always like to buy Walmart t-shirts to wear. Okay? So I haven't been to Walmart to buy t-shirts in like over a year. So I said to myself before I went, I said, I wonder what the price is going to be. They used to be $5 a piece. Right? And I said, this will tell me what inflation is because it's been a year since I've been in there to get some t-shirts. And I said, on the way in, driving into the store, I was saying to myself, I'm going to use this as an inflation gauge just to see how bad it is. Will they be, they were $5. Will they be $7? Will they be $8? Will they be $9? Heaven forbid if they're $10, I was saying to myself, you know. So I got into there to the t-shirts, and yep, they still had the exact same t-shirts I like to buy. They weren't $5 anymore. Drum roll, they were $6. So that sounds just about right. And that's the price everything has went up. So t-shirts went up from 5 to 6. Everything across the board has went up that same amount, pretty much, more or less. You know, we're looking at probably around 15% or something like that. So inflation's not super bad yet. There's inflation, but it's a hell of a lot higher than they're saying it is, guys. 2%, less than 2%. My foot. I would say it's in excess of 10%. Probably somewhere around, depending on where you go. Depends on what items you buy, you know. But you got to cut it across the board. Some items have went up 20% and 30%. Some items have went up 100%. Like I had to buy some plywood. Oh my gosh. The price of plywood. I can't believe the price of plywood. Is that stuff made out of gold? Are they gold bars? For crying out loud. And they're hard to get. They're out of supply. You know, oh my goodness. Lumber dealers. Lumber itself. The price of lumber. What? Why? I mean, all they got to do is cut down a tree and saw it up. It's almost like it's free, for crying out loud. It's only the price of this. It's cheaper to get than oil, you know? Why is the price went up so high? It's went up like 4 times. Had to buy a 1x4 by 12. It's only 1 inch thick, 4 inches wide. It's half the size of a 2x4. So it's basically a 2x4. I remember for years, 2x4s were $1 a piece. Okay, yeah, I'm going back before the year 2000. But for years they were that price, $1 a piece, especially economy studs. I see them for 79 cents, 69 cents. You know? You go out to the big pile and you pick out the economy studs and you take a look at pick the best ones. And you know, I'm going to tell you, $6 is what they charged me for a 1x4, half the size of a 2x4, over $6 a piece. You know, they're getting their lumber prices are gone off the charts. But you know, that's one of your items that's went up a lot more. It's going up a lot more than 10% per year. It's going up like 100% per year. You know, building materials. You know. Anyway, listen, thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.